The market is going back up just in the last couple of days. For example, the Dow Jones got about 18% plus, S&P 500 got about 16% plus, Tesla made about 27% plus, and this is all over the stock market. Even though yesterday there were announced the jobless claim numbers, which were a record high since 1982. Now this seems like a very, very big rally, even though we have this bad news. However, let's have a look what's really going under the carpet, because this is the most important, how we move from here, how we position our portfolio. And 22,000 in the Dow Jones is just the level of 2017. So without further ado, let's roll.
Wolf of Dubai.
Okay guys, so what is happening? We had since a couple of weeks, approximately middle of February, it all started. It started when the whole health situation around the globe developed, and we went into something unprecedented for our economy, unprecedented for our humanity, and so many uncertain things brought the bull market down. The bull market was ended after 11 years. This is something that was absolutely crazy. Never we would thought that this would happen, and this can go so fast. Now this is something that obviously is the health side, which we will talk about it in a second, but what the currently bounce back is based on. Now fundamentally speaking, there was a very, very oversold market, so we had really a lot and lots of people that sold very, very fast, and then we have on the other side the positive things that, you know, such a bounce back was overdue, obviously. However, you know, this is just currently a rally in the bear market. Don't forget about that. The best days are usually the days during the worst timings and the other way around, and therefore, you know, we can see that actually this can maybe go a little bit more further up, but then we will hit a second of resistance, which can bring us down to test new lows. But before we dive into it, let's have a look which news currently pumping the market up. So one of the most important parts that pushing the markets up is obviously the $2 trillion historic, never have been done package for the US economy. This is just to give you an example. This is about 10% of GDP. Now think about it. Is 10% really sufficient if our country or countries worldwide will go into a lockdown for maybe 4 weeks, 6 weeks, and we return to normality within the next couple of months, maybe even, you know? Still, let's say this all get over and we still will not use airplanes and hotels like before. Obviously there will be a surge in demand, especially when we can finally go out of this and you know, enjoy a little bit of freedom back when everything cooled down a bit, and when we have things like, for example, a vaccine, right, for the invisible enemy that is out there. However, you know, this is the biggest package that the US economy ever did, and therefore this obviously pushing the markets up. Plus, as I said, the mechanics of the markets, which is, you know, the oversold situation. Moreover, we have hedge funds and pension funds that are going along right now, and moreover you can see also that after the first quarter usually big pension funds are restructuring their portfolio, and what is currently very cheap along all the asset classes, obviously it's these stocks, and therefore, you know, we see a big money behind it. I think totally we see about $900 billion that are pushing into the market, and this obviously is a huge huge power, financially speaking, monetary speaking, plus all the Federal Reserve methods that are giving the market liquidity. And obviously we're seeing this in the market, and obviously this is not the whole solution to that. We are not to forget in the health situation. So we need to get out there that doctors and everybody else who's out there in the front lines are having what they need to fight this. Because in the end of the day, don't forget that this brought just this week 3.2 million people to claim jobless. And I believe the number is actually quite higher because, you know, you have to understand that jobless claim sites went offline. Apparently many offices worked 7 days a week just to handle all the paperwork. So I think there's much more to come, and we see, and I'm hoping this will get better soon. Also with the aid package, I think there will be much more to come. This is much bigger than a $2 trillion problem. But however, you know, this is stimulating obviously the market right now. This is something that we have as a rescue right now on the stock market, and this obviously showing signs after just weeks and weeks of sell-offs. And then let's see how long we can enjoy this kind of bounce backs. And you know, it's not only my opinion, it's opinion of many economists and big investors out there. Just if you're watching CNBC, there's a lot of people that saying, hey, definitely short term we are seeing a bounce back, but be careful because this is something that will test the lows there. We are not still over yet, and you know, there's lots of other things to come. Don't forget about the earnings reports that we have no clue how they look like and how they will look in the Q2 of this year if this continues. However, you know, let's have a look on the market. So as of this recording, we are around 2576 in the S&P 500. So lots and lots of people are speculating that this, depending on how this week ends, can jump back to about 270 levels. So this is a very stable resistance here, and you know, we are approximately away, let's say still 6-7-8%, and then we are reaching these levels, and then mostly we will see a lot of pressure to sell back. And this is also what Morgan Stanley shared in one chart. If I will find it, I will put it here. Definitely, you know, there's some resistance. We crossed some resistance, but you know, 2,700 is you know, and would be a run of in the end of the day of about 20% more or less. So this would be a great run just in a couple of days since about the 23rd of March, which is like a 3-day in a row gain, which is obviously perfect. You know, the 2 in a row gains was back in the 11th or 12th of February. This was around when we had the S&P around 3,350 points. So, you know, you can see how long it was ago that we got 2 days in a row very positive. However, obviously the market is currently unpredictable, you know, even though this technical analysis can help us to understand where the market can go in a couple of days or a couple of months. However, you know, think long term, because this is something that, you know, we will overcome as humanity. Also, many things will change. Let me know in the comments below what you would like to see, which stocks I should analyze. I'm very keen to analyze companies like Zoom that will change how we will do meetings, and therefore I'm very curious to see if there is some interest out there. Let me know in the comments. And also make sure to like this video so far, because a lot of people love these videos obviously and watch them every single day. I'm very grateful about that. And also there's a lot of time that goes into research of this kind of videos, and as I'm posting it every single day, it's very much time that influence there. So subscribe if you are not subscribed yet to the Wolfpack, and you know, let me know what you think about the market. This is something that nobody can estimate. We can just, you know, get this crumbles out of the market, some signs of relief, some signs of negative news, and then what happens if the market priced in everything of that. Who knew that we will have a record jobless claim since the 80s, and the market goes up 4% or up to 4% or even higher or lower. So this was very unsuspected, and the market is doing something that it never done before, like every single day on the stock market. And therefore you should stay tuned on this channel for the next couple of years. If you watch this for the very first time, look onto my old videos. I said, for example, Tesla will go up from $178, which we all celebrated very much. So therefore let's see how this works out. I'm very curious if you watch this video in a couple of days, if this went through. However, 2,700, this is the mark that we could reach short term, and then from there maybe test new lows from this side. Thank you very much for watching, and see you tomorrow.